Hello, good morning. Welcome to another ES Futures trading stream. Today is Tuesday, May 7. It is 10:03 a.m. Eastern Time. This is Eastern Time in the US. The market has opened about 30 minutes ago. It has opened with a gap, with an upside gap. If you check your daily charts, now this is very important here, right? Don't fight momentum. Just don't fight momentum. If in doubt, don't fight momentum. This market is super weak. I mean, the way how this trading has been conducted is very, very questionable, right? But this market has momentum to the upside. If I check, for example, let's go straight to this, right? In the monthly, it's forming a 3-month range. The weekly has a gap. Right? It's really weird to see a gap in the weekly time frame. And we have back-to-back gaps in the daily. Very emotional market here. This market is in short covering mode right now. Now, 1, 2, 3 gaps. The odds that these gaps are going to remain are very low, right? Odds are high that at least one gap is going to be closed. And now, for today, specifically for today, there is some opportunities when the market opens with these gaps, right? We had a couple down. We have a couple now. Well, this is another one from yesterday, and the day before that we have another one. Maybe one is a sign of change, right? The second one is showing continuation of the breakout of this 12-14 day range. This is penetration into the upper range, but this is very emotional now. We have a very prominent POC, but notice, not POC, notice what happened here, right? What was happening here? There's a lot of selling in the overnight. Settle is up here, right at the high. The market yesterday closed right at the highs. Significant big blocks up here. And I wouldn't suggest any kind of trading right at the opening. But these kind of days are the ones that can give us some opportunities. I was checking Nasdaq as well. Do you remember what happened yesterday when this market was bought? Like, it was yesterday? Yeah, it was bought like 5 times from the previous day high. Today, the same thing happened today. The same thing, right? Same thing happened. And yesterday the gap was closed in Nasdaq. Today, the market during A was bought from exactly the high here, right? So that was an opportunity there. A counteraction to this overnight inventory, and also knowing now this is the second or third day in a row that longs, especially weak longs, are coming to the market. Right? We have some kind. I wasn't short the years. I was shorting Nasdaq, okay? Because this is very strong right now. It's showing momentum. Gaps are not being closed, but Nasdaq, I was shorting the behavior here. Just that, right? Let me show you what I'm talking about here. Exactly the same kind of trading that happened yesterday is happening today here in this market. I don't care about the reference, but the way how the market is trading. It will take a while to upload. In the meantime, if you check also, I hope you have checked the bond markets, right? Weekly and daily are trending higher. So we have a trend to the upside. Or one time frame higher. Not trending, one time frame higher. The trend is to the downside. The bigger one. Now, checking the markets. If you check, wait, this is huge short covering going on. We have a range here. Range. This is the 10. This is the 30. You have a range, and this is short covering. Notice what's happening now. No. Where these 2 days are coming. Now we have an inside bar here. Inside bar here. There's a breakout of this inside. Go with the breakout of the inside bar, preferably in the direction of, I mean, this is a short-term trend, right? At least this one. Now the next thing to monitor here is this high here. And here we have the 200 moving hours right there as well. Okay? We are still inside this big day range. Potential to the upside? Yes, there can be. The 30-year had actually took that range out. Now what's happening? Ooh, look at this. With the crude, man. This is weird. This is very weird here. This is mechanical sale, but this I wouldn't say this is long liquidation. I can mistake, this can be mistaken by long liquidation, but we may have some serious selling here. I don't know. What's happening? Alright, dollar is buying from these highs. Notice the channel is forming, the trend is forming in gold. Right? We have really nice high here. A very erratic market, where gap. This gap has been closed. Our indices, the ES has been bought for the 50, was bought for the 50. Okay, something similar happened in the other ones as well. Now this is just showing some weakness of the movement. It looks like short covering. Now look at the volume. Volume also is decreasing. Another sign that might be short covering. The difference today is we have high increased volume today. Or at least that's what we have at the opening. All right. Oh, here it is. This is what I was talking about. Yesterday, NASDAQ, we have this high, and this market, it was unbelievable. It was just unbelievable here how this market was bought 5 times here. 5 times here. Then this high was taken, and then boom, we have the rally that followed. And the same thing, exactly the same. It's unbelievable, right? Traders do what work until it doesn't work anymore, right? The reason, by the time they are wrong, they will be right multiple times. That's why you go with the market. We go with the movement, right? You don't fight momentum. If you keep insisting in shorting a market that has momentum to the upside, by the time you're right, you will be wrong multiple times before. You would have been wrong multiple times before to have one thing right. But the momentum is the opposite, right? It may be weak, it may be questionable, but traders are doing the same thing that is working. By the time they are wrong, they would have been right multiple times. Can you see how these dynamics, how trading is one of the hardest things, hardest business there is out there. It's really, really, really hard because it is assumed or beliefs, right? And the market we trade is not just what we have in front of us. In this case, we trade futures. I trade futures here, but the main, example is, as people cannot understand. Many people cannot understand this. The main thing we trade here, is ourselves. You got to be in a position that, that do not allow you beating yourself, right? Checking your emotions. doing what most people is doing is not going to make you successful. As easy as that. Right? Because most people here lose money. Right? You can be a good guy, you can be a good professional, you can go be an excellent parent, a good friend, but that has nothing to do with trading here. Trading is different. In any case, as I was listening to Tom Hogarth yesterday again. Oh, I finished his book for this is the fourth time I'm reading or listening to that book. It's very interesting. It depends what stage you are in your trading career to understand him or to better have an appreciation of what he's saying. Um, and what he said, the last thing, the closing chapter is you have to think different. Well, normal doesn't make it here. Normal doesn't make it here. You got to be one with the market, understand the market, and understand yourself as well. That is key in trading. It is very, very important here. If you got um, the thing in trading in this career is when people start to get a grasp of what may be going on, usually they're out of money. That's what happens. Unfortunately, that is what happens. Now, today, for example, right, what we have seen so far was a counteraction. That's what I think it is. Right? I believe it is. It was a counteraction to overnight inventory. Momentum remains to the upside. The days to the upside, value is higher. Every gap in Nasdaq has been closed. The ES is keeping these gaps. Right? It's extremely risky, but the VIX is not reflecting the risk we have. The risk that this market is showing. Now, the upper side, if you check the upper side, what we have in the upper side, right? This high that we have here was sold from Halbach on this day. When it happens? Almost 1 month ago, right? April 12th. Then the next one, the 15th, the Monday that followed this day, it was sold from the overnight high. Very mechanical day. This day, mechanical, this day. The same thing, right? The same thing that is happening when this market is going higher. Now, the same thing happened when the market was going lower. Same thing, right? The context is different now. Now we don't have earnings. We don't have these big tech companies releasing news. We don't have FOMC. We don't have non-farm payrolls. We don't have CPI. We don't have nothing like that. Nothing. This contract has how many? April, May, June, a little bit more than a month. A little bit more than a month now to go. I don't think there is going to be more reliant on the news if anything happens here. Right? That thing is out. That's the context now for this market, for what we are witnessing, we are watching, we are observing right now. Most people, most traders, short-term traders, most retail, they have no idea what's going on behind. but, but have no idea what the context is, how to put price in context. All right? They see this market rallying. Okay, this is a buy. Right? Okay. If you are like that and keep buying, this is the thing, right? The stage in your career, what stage you are in your trading career, what stage you are in this journey that is trading, depending on what stage you are, if you are successful, if you are doing good, well, great, keep doing it. Right? But if not, you are just lying to yourself, right? You are just waiting for one day. I just want one trade. That's the only thing I need. One trade. And the market will give you one trade. After 30, 40, 50 trades that went wrong. Okay. And the thing is, we have the tendency to stick, to hold to our losing trades and to cut short our winning trades. Overcoming that has a lot to do with confidence. But we cannot become confident if we don't have an understanding of what is going on. Right? That's the first thing that we need to learn. What's going on? Understanding markets, putting markets in context. The next thing, understanding ourselves. And then you build a strategy. Okay? You build your strategy. This is and the thing is, this cannot be taught. This cannot be taught. Because the strategy I have built is based in the person, the kind of person I am. It's based on my strengths, trying to get my weakness on the side. I acknowledge my weakness. What kind of weakness do I have, right? What are my tendencies? What are the things that have, the more probabilities to get me in problems, in troubles? That what are the things that hurt me the most? Once I know that, right, based on trial and error, I start to refine my strategy. If I say this to you, it will just not make sense. You will not understand because you are trading somebody else's. I may be trading somebody else. I mean, if I write my strategy, I put it out there. And somebody reads, and this is actually what the other person is doing. They may be the same, right? But the other person has come out with that by himself. And that's what makes that strategy his and not mine. I do a lot of things, many things that are similar, quite similar to Jim Dalton. He had repeated the same thing over and over and over when I was with him. And I come out with something that are very similar to his. But the thing is, I did come out with those ones. And now those things are mine. They are not, those are not his anymore, right? These things are mine. And I use that because I come out with that. And that's what you want to get. You want to get to that point. Something I didn't know, I wish, and that's why I put this out there. These companies that allow you to trade, these prop companies, they're of great help when you're learning to trade, you have top step, apex, there's a bunch of those that you can check. They allow you to trade, right? They give you I mean, an account. It's very similar to a trial, right? The thing is when you prove yourself, you can get funded there. You can get funded, but you need to prove yourself. The idea is not to get the funded, but to put your strategy on display, right? To trade there using the guidelines that you are creating. I can say, for example, okay, I have this market. This is the weakest market. I'm going to be short in here. What I'm going to do? Why? For this, for X, Y, and Z reasons, I'm going to do that here in this market. And when that happens, I go short or I go long, right? But you are not risking much money. And I wasn't fan, really. I am not fan of paper trading, because there is something there that really takes a lot out of trading, and that is the emotional factor. The emotional, that's one thing that we need to learn. That's a really key, actually, is learn how to trade without the emotions, right? Without being so emotional. Emotions are always going to be there, right? But there will be a time when I will take a short here, or I will take a short here. I will not have any emotion, okay? I will not be attached to a trade. I will be expecting the market to do something. I will assume, okay, I am wrong from the beginning, and the market has to prove me I am right. And to do that, the market has to do this or has to do that, okay? And in this case, for example, just in this case, this is just an example, okay? That what you want to get. This market is trending higher. Nasdaq, the Dow, the ES, even Russell are trending higher. But there is some weakness here. The weakest market was the Nasdaq. This market has to, when this market was bought here, exactly from this level, our good also this market was being that low was going to be taken. Especially having this, notice where the overnight is very prominent point of control, very prominent point of control, very wide, right? Same goes with the ES. Okay, but where this overnight is, right? This market is trending higher, but the overnight profile, this very prominent POC is not down here. It's way up here. So there is good also. This can have some counteraction here. There might be some counteraction to this overnight inventory, just because this is higher, way up high. Okay, if this overnight was down here, it would be different. The context is different. So I have that piece of information. I have from yesterday the market being bought 5-6 times from the same level. Traders doing the same thing again, and I'm going to do that. Okay, I'm going to short this market, and I get short right here. And the market came back all the way up to here. But the way how it did it, right? The way how it did it, it was, it just didn't have conviction here to the upside. It didn't get to hard back. It kind of like got to this area here, right? To this, what is now this volume area here. It didn't get back in here, right? And I decided to keep it, right? And then added to that. The destination of that trade, POC. The potential, right? I don't have targets. That's another thing, right? I don't have targets. I may see, maybe this market can go to here, right? But I am not going to wait the market came all the way down to here to take profits or to hedge or or do something. That's one thing, right? This is the easy part of trading when dealing with your profits. The hardest part is dealing with losses. And that's something that we need to learn as well, how to deal with our losses. I did the same thing. I did the same thing in the ES, right? Way before this market did this, I got a short here. And I got a short somewhere down here. But the market did not, the way how this market uh, traded or behaved was not the way how I expected it to do. And I did not wait the market come back all the way to here to close. I closed it for a loss. I closed for a loss here. And after that, the market keep coming lower. But it's not what I wanted. It's not. The market can break, the market come back to overnight POC, but it's not. That trade, that specific trade, did not work. And I didn't. My stop was higher than when I closed the trade, right? But I didn't wait until the market hit my stop to close. I just didn't. And these are two ways to deal. These are two different markets, two different ways of trade. Right? And I re-enter a short here when this market had a double low here. Right? It has a break, it had a break, but it did not have continuation. I took some profits here, kind of like a little bit in I mean, if I took the first trade and then the second trade, it is in the positive, right? But it did not have continuation. It just didn't, right? It did not have confidence. It may break, yes. It may come all the way down. It may take all this weak reference, yes, it can, right? But it is my decision not to be there, right? And once I close the trade, that trade is over. I don't look for that anymore. Now, today, we had, what day is today? 3-year note auction. Wednesday. Tuesday. Fue Cluster. Yeah, we just have one auction today. Previous 4.50. I will keep an eye on this one too. I mean, around what time? Around, oh, come on, where are you? Around 1 p.m. Okay. Oh, wow. It's really at the highs here. Huh. God, look at these charts here. Very high. All right. And tomorrow, I think we have something similar tomorrow, right? Around the same time. Yeah, this one, the 10-year. I guess this is going to be more relevant here. I mean, this is not bad, huh? It's going lower. So this, oh, but look at this trend here. Yeah? Sharp break and then it's going higher. Huh. Can you join these lows, for example? What the heck is this? Huh? What about this? I think this is a key level here actually, the 10. And the subset, and after this, I believe that the next day we have the 30. Do we? Yeah, the 30. Same thing here. My God. Wow. The what? Look at that. Look at that, man. Gosh. Okay. And which takes me back to these markets. Let me go back. This market is paying attention to that crap, man. To that shit. Those bonds market. Look at this, what happened. This is a big range here. It's now, there could be some sequential trade here as well. No short covering here. I mean, I don't want to see what happens here. If another day forms here, this will look like short covering here. And that can break the market lower. Now the market taking this. Look at these high lows here. 1, 2, 3. I'm not saying that is going to happen kind of like right away, but that's what I'm watching here. All right. Now, look at Nasdaq. Check this market, man. How this is trading again, man. Selling. Where this selling is coming from? Exactly to the tick from this day here. To the tick. So I don't want to be short in that kind of situation. I want the short side. I mean, the thing here now in these markets, what's happening now? I don't want to upfront anything here. All right. I may say, okay, that this market, for example, is very weak, so I'm going to be long. Notice what happened here. Right? This high, these weak shorts are being dealt with now. Okay. Now where it's coming from? Again, how bad, right? More weakness. Next sellers, the same sellers that were here now selling from here may sell from here. It this just gives me an idea what kind of trading is going on, what kind of trades are behind the movement. Right? Now the shorts can be squeezed really good here. Now in a market that has had a sharp upside movement, what are the odds of that happening? Right? There was tremendous. There was lots of inventory from this area here. That has created this day, and this. I mean, I don't know what's going to happen now. What about the shorts here now? Right? These shorts may fuel an upside movement, but the inventory, the volume of those shorts are not that much now. Are not that much. But this is a market to the upside. This is an upside market. This is a day to the upside. My bad, it's not an upside. It's a day to the upside. The trend is to the upside. If you want to trade with value, that's what you want to do. Value is higher. I am monitoring also Nasdaq here. I am slightly short term. I am not that. I am very, very cautious with this market here. Very cautious. We have a weak level, a weak low, right? This low here. Let me name this low, right? Weak 5-7 low half overnight POC. Look at what the POC is. These weak loans were taken care of. As soon as these were taken care of, another kind of trade, another kind of capital comes in here. Now you have seen what happened the day before. Now I know what is going to happen. Kind of like that mentality is going on. No? Look at what's happening, man. I am not predicting anything here, right? But you can see the behavior, and this is what when window trader in particular is very useful, right? They have these halfbacks here, these halfbacks of profiles, halfback of the day, and we say that this high here had low odds of staying or being a lasting one. Now probably the same sellers will sell from this halfback. Once they are taking out, they will may re-enter or try to short from this halfback. I mean, you can see it. All right, it's not. This is not for me to short the market. This is not for me to go long in the market. That's me. That's Victor here. You can be different, right? But I try that I do not have that kind of personality or traits to do those kind of trades, right? I trade different, but this gives me an idea who is behind, right? Now, halfback of the day is more significant. Okay, more significant than I will do it here. This is daily halfback. I use grays to highlight weakness because this market may have some downside extension. If it has some downside extension, this will not be halfback anymore. Regular traders may have an idea where the center of this previous bar is, right? But of the day, that's another thing. Yeah, there's a different kind of traders. There are short-term traders as well, but I hope you have the idea, right? The time frame, or maybe the buying power, buying or selling power or the staying power can be a little bit different. I am just speculating here. I'm just speculating here. Sometimes these references work really good, depending on context, right? And this is just one piece of information. Okay, I will not base my decision just in one piece of information. If I had some confidence shorting this market, at the opening, which is not I suggest to do, because it's random. You have opportunities right at the opening, or I mean, it wasn't right at the opening. I kind of was like 20 minutes into the opening, something like that. But it's still the first period, right? I wouldn't short this market now. At least not right now. Now, the part of trading, the traditional part of trading, if I can call it like that, is happening now, right? When I just see it and watch and observe what the market is doing. If the market is going to give me some opportunity, if the market is going to show something, what's happening with inventory, what's happening with value, are the breaks being bought, right? Are the rallies being sold, what's happening, what kind of buying or selling we are having, or may kind of have an intuition, right? A lot of what I do also has to do with intuition, right? Once you know what to watch, you just keep watching and watching and watching, right? And you start to developing something there. And you say, oh boy, I feel like this market is too short or too long, or I got this is not going to hold. So I just do the trade based on that. I don't have nothing else. I don't have nothing else. The market is not at any specific reference. The market is not is not here. It's not at this high. It's not a settle. It's not a. It's nothing. It has nothing to do with that. I use those references just to monitor the market. And when I take the trade, many times there is something there that says, right? At the beginning, when you start trading, you have that thing. Okay, I feel like this market is going to rally, right? But we don't have a base for that. But even what happened is we have been taught wrong, or because there's a lot of the more likely situation that had or a scenario that happened is that we have been watching YouTube's technical trading, candlesticks, Fibonacci's, moving averages, retracements, or whatever, all those things, right? All those things. And what happened when we have that feeling, every time we short the market rally, every time the market rally, the market breaks, and we think, gosh, if I do just the opposite, right? I may partner with somebody. If I place a trade, he goes the opposite, right? That's we may think or may have thought at one moment, right? But that's not the way to trade. That is happening because we don't have a deeper understanding of what is going on in the market. Once we know what to watch, we start to see things. We have this aha moment. Okay, gosh, this is happening. Okay, I can see this is selling. We cannot understand, for example, what I may say this market, for example, here. What it is? Okay, here. Every single rally is being sold here in this market. But how you can see that? Why I don't say the market is buying here? Every break is being bought. Why I don't say that? Why you say selling? Why you say buying? And that happens when you know what to watch. Right? That's a really simple things actually. Why I may say, and that's one of the things that actually was very frustrating when I was learning with Jim, is he said any random market, every rally is being sold. Okay, this inventory is short. Inventory is getting short. I say, why you say inventory is short? What makes you think this is short? Well, yeah, and his answer was, can't you see every rally is being sold? And I couldn't see, right? I couldn't understand what he was saying. It is by repeating, and I cannot teach. Unfortunately, I cannot teach that. But nobody can teach that. It is you that come with the realization, right? After watching the market over and over and over and over, you one day, I mean, it may be gradual, or maybe it may be one day, right? Just one day, it just happened, boom. Come on, there are sellers. There's a lot of sellers here. There's a lot of weak sellers. Oh, this selling is different, right? We don't know when bigger money, but strong sellers are in the market, or strong buyers in the market, right? We know they are there by when we acknowledge that there are no weak ones. I don't know if you understand it. I am explaining myself. Here, for example, today in this market, this is Nasdaq. We have seen in this specific market, very specific market, we have seen the buying or the selling coming from this high, coming from this hardback, coming from this hardback, the daily hardback. This is the daily. Oh, by the way, this is, let me put it here as well. I didn't realize it's not here. Session object, hardback, I'm going to put hardback. Data values, I'm going to put hardback here. Here, where is the histogram? Histogram, hardback here as well. TPOs, session object, hardback here. Okay. This is the daily hardback. The daily, right? Daily. We have seen, right? Selling coming from this yesterday's high, previous period hardback, daily hardback, today's daily hardback. Those are weak sellers. Now, if there is some selling that comes from this area, for example, from right now, this market is rallying. Yeah. If the market make a stand here and sells from this area, can you see how the buy is happening here, for example? How it just extended, like boom, 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 keeps moving higher, right? Somebody's pushing that. That's not weak buying here. That's happening right here, right now. That's not. It's different. The push that's happening here is different. I don't know if you can see that. If you didn't know, if you can see, now you have seen once, right? That the buyer, how this market, it was just coincidence. This was just mere coincidence here, what happened here, right? I can't just speculate here, right? I don't know for sure. I will never know for sure, right? I can just speculate here, right? We have seen selling coming from this high, hardback, weak inventory, weak sellers here. Right? When that selling cannot have downside continuation, cannot take this low, for example, what do you think is going to happen to those shorts? You know that those shorts are weak. You know that this market is going higher. You know that the short-term trend is higher. You know that this market is to the upside. It's more likely that this market is going to keep rallying, because that's what the market is doing. It's going higher. If this market breaks, I will be trying to upfront the market. Right? Now, we have seen what happened to these sellers, right? To these ones, the same sellers, right? If there is some selling that happens here, that's different. Right? I don't believe there is any interest here in selling right now, for example. Right? I'm not saying it cannot be. Right? That's what I'm saying. I am not saying it cannot be, right? But that's a particular belief. Right? Now these short-term shorts, are now out of the market. Somebody that knows what's happening, the same kind of observation that we had. This is short inventory. They are just trying to find a level from where to short the market, or this market in particular. Somebody that has bigger capital may have entered, seen that, and just boom, start to buy. Squeeze. They squeeze those shorts, take them up, and that's the trade. That trade is over, right? If that's the trade, very short term, right? Short term trading made by bigger traders, right? That's traders trading the trade. Traders. It's a different thing, right? We have seen that. If I'm going to keep talking about the downside. If there is some selling that happens here, for example, from here, this level, and the next one comes from, may come from here, for example, right? I'm not going to use this, come from here, this area. There is no particular level or reference that is being used to sell, right? In this case, or the buy or to buy, for example, like it happened here. There's no particular reference here. So the absence, when I cannot see trading or short-term traders in this case, or mechanical trading, that's how kind of that gives an idea that short-term traders are not in control of the market. There are some other time frame traders that may be doing something here, right? Now, notice where this market came from. It came from this day, right? From this inside range, and now we are out. We are above this. There's a breakout of this range. Right? This is the job. I'm not saying this is in particular, right? But taking the market outside of previous day ranges, outside of bigger or medium ranges are the jobs of bigger time frame traders. That's bigger time frame participants. Okay. We were talking here, right? How weak the selling was and how we didn't want to be short in this market because the risk was increasing. I didn't get along here. I'm not long in this market, but I wasn't short. Right? I wasn't short. You may be different, right? The first thing I started to identify what the risk is. Now you have a breakout here. I should have taken a loan here. This is we never know when these things are going to happen. Right? And for example, this was the part of the traditional part of trading, right? When you start to watch, when I start to watch the market, what happened, right? And trading is about change, right? Did you notice the change in tempo, for example? What happened with those longs? How the market start to buy? All right, inventory. There's a little bit of inventory that's built short and then boom. You know? That was the counter-reaction. This was the counter-reaction to overnight short inventory. This one. This may be weak, low, maybe big low, but it's something to carry. This also is very questionable here. Right? But remember, this is just one piece of information, okay? This is gap high. This is gap high, exactly at overnight holdback. Okay. This is now. This is gap closed. What? Gap closed. Oh boy. It's also very Prominent. Oh, I want to highlight this thing. I want to remember this down the road as well. But what do we have here? Okay. All right. It is 11 a.m. Unless you have any questions, I'm going to be calling it a day. And wish you guys a really wonderful rest of the day. Now another before I go, there is something else here. You know, the fact that this thing did this it might attempt to close the gap here. It failed, right? But we had one time frame lower here, and it's just by doing this, when market does this, the odds of rotation increases, right? Meaning in this case, you know, the other possibility was or is a trending day. Trending day to the upside. I don't know if that's possible, but that reduces, decreases the odds of trending day. Doesn't mean it cannot be a trending day. It just decreases the odds. Also, it's 3 white here. Now we have a distribution here. Very emotional markets. Very emotional markets here. All right. Have a wonderful day. Have a wonderful rest of the day. And stay safe. See you.